Okay, we'll get started in a minute. Couple of minutes. Okay. So I've got a buddy trading with me today. I have a trading partner. Here's my trading partner. Should I go long or short? Long or short? Go short. Go short. Because I'm short. So that's my buddy today. And if you all know me, you know how much I hate pets. I would never have a pet. Never. But I take care of my daughter's pets and my son's. And that way I realize how much I hate having pets. All right, we're going to go into the room in about 1 minute. I know people love their pets. Trust me, I know. They love their pets more than they love anyone else in their family. All right, 1 more minute. Did anybody look at the CB consumer confidence? It did not look good. It didn't look like a good trade to me. Anybody out there? Trade it or test it? CB consumer confidence? Anybody out there? Other than Albert? So I don't get your name. Explain your name to me, Jeff and Tony. Explain that, if you would. All right, I'm going to go into the room, folks. Welcome to the API and the earnings 10-minute trades trade room. My name is Lee Goldstein, trading director for 10-minute trades. Please remember that all trades we discuss are for educational purposes. It is possible to lose money trading futures, so please trade carefully. Ah, okay, Jeff, that makes sense. That makes sense. Sanji, you know, it's CB Consumer Confidence has been a lousy report. And it kind of showed today why it's been such a lousy report. I mean, it really just didn't work. Ah, okay. All right, Jeff, that's funny. Okay, so there's a lot of earnings. Initially, I always want to try and trade an earnings report if we have the opportunity. But over the years, I've learned when to do it to sit on my hands and when to try to trade. And I hate to say it, folks, today is a sit on the hands. You just have two companies releasing at the same time. And the same thing happened last quarter. Now, here's the problem is this. Google, it's really Alphabet. Alphabet is the parent of Google. And don't forget, we're actually here for a money trade. So I have a duty to take care of the money trade, the family trade, and not the earnings when it comes right down to it. So what I'm going to do is teach everybody how to do my earnings setup. And then, Chantal, are you here? Chantal does our streaming, so I want to know if she's here. Would you please end the streaming at 4:05? Or if Google's earnings come out, you know why. So we're going to talk earnings for the first 20 minutes or so. So let me explain how I do my earnings. All right, so everybody knows. So I also have a Thinkorswim brokerage account, okay? And you can connect a Thinkorswim account to your NinjaTrader account if you have a multi-broker NinjaTrader account. Excuse me. So if you look up here on connections, I'm connected to the wrong 10-minute trades account because I'm not allowed to trade earnings in my family money account in case I decide to go crazy and trade earnings today. But then I have to remember to change accounts for the oil report. So what I've got going on is I'm connected to Thinkorswim two different ways, okay? I'm connected via NinjaTrader, and you can see two extra charts, right, on the right. And then I'm also connected independently just to Thinkorswim normally. So what I've got going is this is a Microsoft chart. This should really be Google. I believe possibly Google will come out first, I believe. And I am so bad at Thinkorswim. This is the only time I ever use it. I never trade on it. So when you talk about the only thing I use it for is I'm just looking at a chart or a couple of charts. I'm looking at Apple for later. I'm looking at Microsoft for now. Okay. And Thinkorswim's, I don't know if there's a way, when I save my charts, it shrinks them down automatically. I don't know why it won't save them. But so right now, until 4:10, I'm most interested in Microsoft and Alphabet. Alphabet is Googl. Google is Goog. Okay? That's the difference. Oh, darn it. So I understand why I have a problem with one of my Thinkorswim charts. Hang on. Not going to be anything I can do about it right now. So just so you understand, I've got two separate charts, Microsoft and Google, and I'm watching them both, okay? And why am I watching them when I also have the charts on NinjaTrader? It's just because it seems like the data feed, it's just not as reliable as looking at the actual chart on Thinkorswim. In other words, I'm connecting to Thinkorswim and it just doesn't seem as reliable. That's the truth. So it's really just for a backup. And I'm also using Financial Juice Pro in the background. The type of trade is a one-click range trade. And that's because it's a manual entry. But let me show you what happened last quarter. So it's really recommended. The risk is so high in a situation like this because both companies come out almost exactly the same time. Now, if you get a gigantic move out of Google, Google is the stronger element of the two earnings reports. Google will move the NQ. We trade the NQ as a proxy for earnings, okay? In other words, there are certain stocks that move the NQ a tremendous amount when their earnings are released. Those are the earnings that we choose to trade, all right? So we don't trade AMD because AMD doesn't really move the NASDAQ all that much. Or at least, you know what? I shouldn't use AMD as an example. I haven't been watching AMD, but it's not part of the NASDAQ. But here's what happened last quarter. You had Google and Microsoft, and Google had mediocre movement, and the trade didn't work because of that. So Google came out, it hit our first target, and then it stopped me out for a small loss. So you've got double risk. You need a good move, which is true of any trade that we do. So that's perfectly okay. That risk I don't mind taking. But then you have the other risk of the earnings just could come out very close to each other. It could blunt one of the moves. It could help one of the moves also. But I don't like to trade on luck. I don't want to get lucky. I want to trade an opportunity that gives me the best chance to make a profit. And actually, we have two good earnings setups coming up. We've got Amazon and Facebook. They're trading pretty much by themselves. And some quarters, they all trade together. And I've learned the hard way by losing money not to trade those quarters. You just have to be willing to sit out a trade. It's like this morning. I was very willing to sit out the CB consumer confidence trade. Look, honestly, folks, I had to go to the doctor. My doctor is really hard to see. I've been having a problem with my ears, and I'm a musician. So to me, it was an emergency. And the only time he could see me was this morning, and it interfered with CB consumer confidence. And frankly, CB consumer confidence, it's not a money trade. I was just going to use it as an educational trade room, and we're going to have 1 million educational trade rooms. So it's okay. My point is, you miss a trade, it's no big deal. Even if you miss a great winning trade, it's going to bother you for a day or an hour or a minute, depending on your DNA. And, then you move on to the next trade. That's the most important part of your psychology, is to not let things drive you insane. Move on to the next item, and you'll feel much, much better, right? every now and then, and everybody has things that bother them the most. What bothers me the most is probably not trading when I know in my heart that I should. Now, I would not call this morning durable goods a situation where I knew in my heart I should. Durable goods, was not a great profit trade, that's for sure. So, I mean, I had, made a little bit of money and then big deal. It didn't really, was not a big money winners. I had no regrets. I had no intent. I was thinking maybe I would trade it live. And then after looking at all the research, I realized that it really didn't give us that great an opportunity. I also realized that there's a few people that traded it and made a couple of bucks, $100, $110, $150. But look at CB. If they traded CB, they probably gave it all back because those are coin toss trades. I don't know how many times I have to say that. The coin toss trades, they will have their days when they look great and you want to punch yourself in the head for not trading it. And then you trade it the next month and, it takes double to stop and you want to punch yourself in the head for trading it. So you don't want to trade the coin tosses unless you like the action and you just can't control yourself. And there are people that like to do that, and that's okay. I don't mind. I don't mind telling you how I would trade it if I was going to trade it. And I'll show you a trick too, so that if you're not at your charts and you want to leave the strategy running and you can see, so you can see what happens. I'm looking at Google, Alphabet actually, and Microsoft, but I was explaining why it's probably too risky to trade them today because they get released together. So I'm going to teach everybody how I do my earnings setup. All right. The earnings setup is really very easy. And there's a part of me that wants to maybe trade one contract on Google because I could risk $100 to make $150, and I'll explain why. All right. So I might do that. It's not my account. I would be trading my boss's account. I also don't want to damage his account unnecessarily. Albert, it was a bad trade. It was a bad trade. I tested it. So, but here's last quarter. Google came out and it just didn't have a good move. It didn't hit my second target. And that's a definite losing trade when that happens. It reversed and stopped me out. And then you almost couldn't tell what was going on with Microsoft. It was hard to tell what was going on with Microsoft. But I think Microsoft, because of Windows 11 this year, they're going to have a bigger move than normal, which makes the trade riskier, okay? Because Microsoft may have more impact than it usually has because they've got a lot of things going on business-wise, okay? So that's something you have to think about. Here's the way that I set up my earnings trade, though. And you can write this down, practice it. Let me put my recorder on so I can make this as a video. Give me a second. Okay. Here's how I set up my earnings trade. I do not expect most people to have a multi-broker account connected to TD Ameritrade Thinkorswim. Okay, so let's just assume right now nobody has it connected, and then I'll show you what I do. I use the NQ to trade the stocks that I think will move the NQ when they release their earnings. It's the regular software, just like for the breakout, but you're using ticks above the range, ticks below the range, not the bracket. Forget the bracket. Ticks above the range, I'm making it 14. Ticks below the range, I'm making it 14. And the one-click bar look back, I'm making it 6. So I'm going to look back 6 bars. I'm going to look back 6 bars, and that's going to determine my highs and my lows, and it'll create my range. 14 ticks above it, 14 ticks below it. And then I'm going to set up a target, 2 targets usually. And on the NQ, I almost always use 7 ticks and 25 or 30 ticks for earnings, okay? And you could do bigger if it's Apple, for instance. But let's say we do 7 and 25, and I would use a stop of 20 ticks, okay? It's not complicated. But today I'm considering maybe just one contract to risk roughly $100 on one big move. Maybe we'll get a good move. But the point is, so we've got 14 ticks above the range, 14 ticks below the range, right? One click bar's look back is set to 6. I'm looking back about 6 bars. I've got one target for 7 ticks, one target for 25 ticks, and a stop at 20. Then the only other thing you have to worry about is call it what it is. It's a one-click range trade. Trade type. It's not a breakout. It's a one-click range trade. What defines a one-click range trade? We're on a 1-minute chart on the NQ. What defines a one-click range trade is that the entry is manual. It's manual. Okay? There will be buttons on the screen. When you enable a one-click range trade, the buttons show up on the screen. So now, remember, one-click 6-bar look back. 1, 2, 3, 4, 5, 6. I should get an order roughly above here and somewhere around here when I click the one-click range entry button. And that's exactly where my orders are placed. Now, I don't put those orders on until 4 o'clock. I'm just showing you how it works. Okay? If I get filled, it splits my targets apart, 7 ticks, 30 ticks, 25 ticks, whichever. Now, because this is a high-risk situation, let me backtrack. I also have connected TD Ameritrade, a multi-broker NinjaTrader account, okay? A multi-broker NinjaTrader account. My charts have to be set. You choose data series, click it, and your trading hours must be default 24/7 on the chart so that you see the price after 4 p.m. when theoretically the market is closed. But stock prices are still updating, okay? So are futures, but that's a whole other story. It's like a fake close, but it is the theoretical close. So data series, you right-click the chart data series and make sure that trading hours is default 24/7. Apply it and okay it. That way I will see my price after 4 p.m. Now I'm using a stop of what we say, 20 ticks. I'm risking about $100. And what I could do if I want to be a lunatic, not really, if I want to try and take a real chance, I can trade with no target. If I trade with no target, let's say I trade just one position one size, but I don't use a target. If I get a 50 tick move in Google, I could either move my stop like a lunatic above my entry, or if it's that big a profit, I could hit the close button and just grab whatever profit I can grab. You can do that. If you trade with a target, if it hits your target, it'll take you out of the trade. So trading with no target, it just gives you an opportunity to get a bigger profit if there's a very big move. The downside of trading with no target is if you get a 20 tick move and it reverses ultra fast, you might not have time to get out of the trade, or you might be a deer in the headlights and freeze and forget to move and not take your profit. And then it reverses and you get stopped out. So the downside of trading without a target is you may not move fast enough to get yourself out of the trade. It is not an unreasonable way to trade, though. We do it. We've done it all the time. When you trade with one contract on a report that has a very big chance of having a very big move, it's not an unreasonable way to trade. It does mean that you have to be even more experienced with the platform so that you have the ability to manage the trade in a profitable manner and get out on time, right? Now, you also have two earnings reports that could both be impactful, possibly both at the same time. So it could damage the report. It could damage the move. It could damage the move. So it's a tough decision, folks. I mean, that's the honest truth. Tough decision. Tough decision, especially, Google didn't have a good move last quarter. So look, we're risking 20 ticks. Let's look for 25 ticks at a Google. It's really hard to get out of an earnings trade because they do reverse fast. They can. And in a sense, when you have a big target like 25 ticks, you still have to possibly be ready to get out of the trade fast also, right? Correct? So I'm tempted to trade with no target. I like trading with no target. I need some advice. I need to know if I should trade with no target. Trade with no target. Trade with no target. Okay. So my trading partner says trade with no target. So Fred says NQ reverses too fast to trade with no target. But Darwin says trade with no target. I kind of agree with Fred. I think because I'm teaching today, we're going to trade with a 25 tick target. I'll be perfectly happy if I make 125 bucks. It's not anything wrong with that on a difficult, tricky earnings trade, okay? I'm willing to risk one contract, and it doesn't mean that I have to put the trade on. I could cancel the trade if I just think it's too difficult, right? You don't have to do it. No one's going to make you do it. Right? Jeff and Tony, I think that trading 3 contracts, depending on the size of your account, you're risking possibly $300. It's not unreasonable amount of money to risk on an earnings trade. I'm trading my boss's account. It's a pretty small account. I don't want to lose $300 for him because he only trades occasionally on some of the money trades when he's not busy doing other stuff for us. So I don't want to, you know what I mean, folks? I mean, if it was my account, I'd probably do what Jeff's doing. I would trade 3. Jeff, I'll tell you what I do that gives me extra profit if it's a small move. I like to double up on that first target, skip the middle target. In other words, 2 contracts for 7 or 10 ticks, and just go for the big one and get the heck out of the trade fast if you only get a 30-tick move. I went to time.is, folks, time.is to sync my computer, and AM has a great idea for people that have a decent sized account and you want to start learning how to do these earnings. Every quarter we're going to do this, and it seems like slowly but surely we're getting more and more trades. Also, we got Tesla. We're not going to be able to trade Apple today, and I'll explain why, but usually we do get to trade Apple. Tesla's new. I don't know if Google will be tradable, GOOG, but you could use the MNQ, the micro, right? You can use the micro and risk like $10 and see if you can handle trading this way, right? So I'm not going to put my orders on the chart until after 4 o'clock, but I'm going to try and put them on the chart as close to 4 o'clock as I can do it safely, because Google comes out pretty darn close to 4. And Microsoft could also. If they come out the exact same time, it's a problem. It could be a problem. Okay? Mark, that was old. I just wanted to tell you about it, but it was so many days ago. We're too close to the trade right now, so don't worry about it. I was just going to tell you it was a good trade, Mark. It surprised me, and Intel is worth trading for next quarter. That's really what I was going to say. I was surprised at the quality of the move. That's all I was saying. I thought that you had interest in it, so I just wanted to let you know. The Intel trade was a very good earnings trade the other day. And so was Tesla. No talking now. See if we get a safe market. Now, see, Google might be done already. It's acting weird. I think the Google news will be good. Google's bad, and it's out. I'm too far away to trade this. I'm too far away. Okay, maybe it's not out. I can't tell. I don't think it's out. I do not think it's out. I think it's going to be short. I don't know why. But it's not out. It's out. It's out. It's out. I'm canceling the trade. The reason I'm canceling is because Look at the move on my Thinkorswim chart. That's a huge move. It's out. And it didn't give me the move I was looking for at all. And now Microsoft is done. It's on the verse. See, Microsoft just looks like it just whipsawed out. So look at this, Microsoft. And when you do earnings, folks, you can't, this is what I mean about two earnings at the same time. Microsoft is out. Big, giant up move. Google, I'm just listening to the earnings in the background. I'm turning off my trade so I don't do anything stupid. It is what it is. I mean, how do you trade that when they both are coming out at almost exactly the same time? So that to me, and you didn't really have a very big move in the right way at the right time. It just, to me, it wasn't really a trade. That wasn't really a trade. Okay. So you know me, I'm not going to go now. Microsoft has done a whipsaw. Okay, Microsoft did a whipsaw. It went up, it went down, very difficult to trade. Those are things you want to be aware. If you're not getting good follow through out of the NQ initially, I don't usually trade that second move because I don't know what that second move is going to do. I don't know that it's going to jump up first and then go down again after that. You don't know. So if I don't get that initial move, I'm perfectly okay with just forgetting about it. It doesn't bother me. It is what it is. Now, it's interesting that you're getting a solid downward move, and there was also a downward trend today in the NQ. But it is what it is. I just didn't have the type of move that I wanted so that I could take my trade. Okay, so that's that. Now, the problem with Apple, Mark, it's not tradable today because it's the exact same time as the oil report, 4:30. And Apple will probably release their earnings exactly at 4:30. That's been their history. And my job here is to trade and pay attention to the API. So the only thing I wanted to see that might happen. So Alphabet is out, all right? If they're not out, and maybe, it's not saying, I'm not seeing the numbers, but that doesn't mean they're not out. It's a little bit of a tough call on Google here. So hang on one second. I'm just looking. I don't think that Google is out yet. And it's Alphabet that I'm talking about. Let me just relax for a minute. Hang on. Yeah, Alphabet is not out yet. Alphabet is not out. The problem is the market is pretty volatile. So Alphabet's coming out right now. Sometimes you get an advance jerk of the candle right before the earnings come out. I think the risk is so high today that I don't want to throw my boss's money away just to show you that I'm a macho trader. That's not what I do. But I mean, it almost looks like my chart in Thinkorswim, the Google chart, wasn't really looking correct, but it does not appear that Google is out yet. I keep saying Google, but it's Alphabet. So I'm just chilling and watching for a few seconds. I don't think, I'll be honest, folks, I don't think it's out. They're not talking about it. but the market is just dropping down. If I put my orders on, I'm going to get filled short. And then if Google's earnings are great, I could be on the wrong side of the market. The risk is extremely high right now. So to my way of thinking, I would rather, you'll see, we'll do this tomorrow, totally more sensible, because you're just trading one release, not two. And you have AMD affecting things. It's very, very complicated today. So it is what it is. I mean, I don't see an easy way. I don't see an easy way of being safe. That's what I'm concerned with. I'm concerned if I put my orders on, I'm just going to get filled. And I don't want to do that. Now, I think that we're going to miss GOOG. Regular Google releases at 4:15. They have never, I have never seen them release when the market was open. Remember, the market used to be closed from 4:15 to 4:30. That changed about 3 weeks ago. Now the market is open from 4:15 to 4:30. So I don't know if there's actually a move on GOOG because we never had the opportunity to trade it. Now, see how Google just came out and it's negative, or it looks like they're coming out. It's just all too late to try and catch this the way that I would have done it. Too much time uncertainty for me to make this a meaningful trade, okay? It's just too much time uncertainty today. So like I said a million times, I never cry over a missed trade, never. So I'm gonna go, look, I'm gonna keep my Thinkorswim chart open, okay? I'm gonna keep my Thinkorswim chart open on Google, GOOG, but I need to kind of concentrate. See, I don't even think regular Google is gonna do anything, because it's really the same company. That's the truth. Google, Alphabet, they're essentially the same company. They own each, Alphabet owns Google. So I just wanted to see if, no, and you know what? When you look at the chart, it's the same behavior also. So there's no point. My idea isn't going to work with Google, so that's off the table. So the only thing I'm looking at is Apple. Here's our problem with Apple. We need to set up our oil trade.